in your spare time?
Recording in progress.
Okay. Well, welcome everyone. My name is Ann Fabry. I am going to be talking today about incentives for businesses that are available through the state of Pennsylvania. Let me get started with the presentation. I work for Bowers R&D and MBM Associates. MBM's been around for 24 years, so you may have heard of them. I've been down to the Penn Innovation Center before. Bowers R&D is a little bit newer of an organization. But we work with grants and tax credits. I'm trying to see my presentation here on my screen and I don't see it. Okay. There we go. Okay. Okay, so grants and tax.
Sorry, there's a message on this. Just click OK.
Okay, it's not showing up here. High-tech issues here. Okay. Okay, here we go. So anyway, there are nearly 2,000 different state incentives. You always hear the saying that there's money out there, and but people don't know how to get to it. So the honest truth is there is money. You just have to be on top of it. Things change constantly at the state level. When new administrations come in, they offer new incentives. So that's what we do. We stay on top of that, and we provide that information to our clients. And they can be very substantial benefits. So I'm going to talk to you about some of those opportunities. I'm primarily going to talk about grants and tax credits. The state of Pennsylvania is not very generous with grants, to be honest with you. They come and go from here and there. But primarily what I'm going to talk to you about is what's called a sellable tax credit. And I'll get into that a little bit more. So as far as grants go, these are some of the grants that the Pennsylvania Department of Economic Development offers. As I said, they don't offer a lot, but they are things that you can look for. If you go to the Economic Development website, they can change periodically, and I would encourage you to do that so that you can see what they may have available at any given time. It's called DCEDC. But some of these grants, the Workforce Economic Development, you can get reimbursed for skills and training. WEDNET, that is known as, if you may have heard of that before. Basically, you can create training programs, and then you can get a certain portion of the cost of those training programs reimbursed. It's actually run through the community college system. You can either do something as simple as, if you're training someone to use Excel, for instance, or you can create your own custom training programs or certification programs, and you can get a portion of the cost back. Ben Franklin, probably heard of them. They offer grants as well. They also offer, money that has to be paid back. So they have a grant opportunity, and they also have an opportunity that you need to repay. But they're definitely worth looking into. And then the Global Access Program for export sales, and then the Manufacturing Resource Center. If you are manufacturing a product, they can help in many ways, and I would encourage you to look at those. On the federal level, you want to go to grants.gov. We primarily work with state incentives. We do some federal, but there are so many federal opportunities that a lot of our clients are researching those on their own through grants.gov, and then working with us for some of the state incentives. Tax credits. This is where it's kind of misunderstood, because when you think of a tax credit, it is obviously what it sounds like. You qualify for a program, the state or the federal government puts a certain amount of money in your account, and then you can use that tax credit to pay your taxes when they're due, either at the state or federal level. But the state of Pennsylvania has something called a transferable or a sellable tax credit. And this is what kind of gets exciting. If you are a company that's young or is not profitable and you don't owe any tax dollars to the either state or federal government, in Pennsylvania, They have sellable tax programs that you can sell your tax credit to somebody who needs it, and you can monetize the amount of your tax credit. So now you have capital for your business. And this is what a lot of young innovative companies are doing in this area, is taking advantage of some of these programs. And I'm going to talk to you about what they are. Okay, so with a transferable tax credit, you have 3 options. You can use the credit. So if you do, let's say you owe Pennsylvania tax, or you owe, well, in this case, we'll talk about Pennsylvania, but there are other states as well, I should point out, that have these transferable credits. But you can use the credit to pay your tax. That's one option. You can carry the credit forward. So if you know that you're not profitable now, but you anticipate in maybe a year or 2 or 3 years, whatever, you're going to be profitable, you can hold on to that credit and use it to pay in the future. Or you can sell the credit and get cash today. So these credits are extremely valuable. And there's no limits on what you can use the money for. If you do sell the credit, you can use it for working capital, hire someone, pay your rent, whatever. There's no limits. It's your cash once it's been sold. So here's a list of some of the sellable tax credits in the state of Pennsylvania. And I'm going to go through each of these. I'll go through the enterprise zone quickly. Basically, as you grow and you're looking for a site perhaps for your business at some point in the future, there are certain zones where you can get an enterprise zone credit up to $500,000. It can be towards the cost of the purchase of a building, or it can simply go towards the cost of improvements on a building. So just keep that in mind. There are specific zones throughout the region. I'm working with the city of Philadelphia right now to try to get some zones here because they let theirs expire, believe it or not. But there are zones in the suburbs primarily right now, and hoping to add some to Philadelphia. Oops. Basically, as I said, you have to invest in land or building. You have to spend money on improvements. And $500,000 is the maximum that you can get. And in order to do that, you have to spend about $2 million. If you spend less, you just get a smaller percentage. It's a 25% credit. So keep it in mind for the future. Okay, the Keystone Innovation Zone Tax Credit. This is known as the KIZ. You may have heard of that. This is available to young innovative companies. You have to be 8 years and under. You have to be located in a zone, which the Penn Innovation Center is within a zone. It is fed off of revenues for your company. Basically, what you do is they take a base year of revenues and they take a comparable year of revenues, and they compare how much you grew year over year, and they give you 50% of your growth. So for example, if your base year of revenues was 2020 and you had 0, which is fine, you can have a 0 base year. Your comparable year was 2021, and let's say you had $200,000 in revenue. You would have grown $200,000 year over year, and they would give you 50% of that, or $100,000 in the form of a sellable credit. If you grow by less than $200,000, let's say you only grew by 100,000, you would get a $50,000 credit. If you grow by $2 million, you would still only get a $100,000 credit. It's a maximum of $100,000. And again, it's in the form of a sellable credit. So what happens is you qualify for this credit. It's in your account at the state. You can decide, am I going to use it, use a portion of it, carry it forward, or am I going to sell it? Our company has a network of buyers, and this is something I never knew about until I was in this business, but large companies buy these tax credits. We bundle them, and that's how they save money on their taxes. They're sold at a discount. It's generally around 92 cents on the dollar. So if you had a $100,000 credit, it would be like a 92,000 return. So they saved $8,000 on their taxes, and you got cash that you otherwise would have just been sitting in an account somewhere. So the KIZ is, there's many zones. There's zones in Montgomery County and in Bucks County, and they're scattered throughout Delaware and Chester. But this area, University City, is pretty much a zone. Here's a look at the map. You can see everything that's included here. It goes right through the center of the city, includes University City, Fishtown, that area. All this is in the zone. It's kind of strange, the shape of the zone, but it was basically because it's a collaboration between business and educational institutions. So it includes certain hospitals and things. That's why you'll see it kind of shoot up on Broad Street. It doesn't seem to have a rhyme or reason, but it actually does if you know what the purpose of it was. And again, the Pennovation Center is within the zone. This is the Bio 611 zone. This includes most of Bucks County, Montgomery County, and part of the northeast section of the city. Okay. The next sellable tax credit that Pennsylvania has is the research and development tax credit. Whereas KIZ focuses on a company's revenues to determine what they're eligible for, research and development tax credit focuses on a company's expenditures in qualified research and development. So basically, if you're developing a product or a process, getting it ready for commercialization, or you're improving upon a product, you can qualify for potentially for the research and development tax credit. What it is basically returning a portion of the money that you spent on qualified research. And the way they factor that is looking at your wages. So if you have people that are devoted to development, or, you know, testing, that type of thing, or supplies. And when I say supplies, it's not equipment, it would be disposable supplies. So for instance, if you were creating, I mean, a bakery could be qualified for this because you're creating a product and you're testing new recipes and you're wasting certain ingredients in the process. Those ingredients, the cost of those ingredients would be covered as R&D along with the people doing the work. So it can include anyone from a bakery to a medical device company. I mean, research and development is much broader than people think it is. It's not just test tubes and lab coats. It's any product or process that you're creating. So basically you would get back a certain portion of the money that you spent. The nice thing about research and development credits are that it doesn't matter how old you are, whereas the KIZ, you have to be under 8 years. Research and development credits, it doesn't matter how old you are. It doesn't matter where you're located. You can apply for this every single year that you do research and development and there's no limit to the amount of money that you can get. So definitely valuable, and it is sellable just like the KIZ. So again, if you don't owe tax, you can sell the credit and you can have additional money. And a lot of businesses take both the KIZ and the research and development credit. So it's another source of capital. Believe it or not, Pennsylvania has a video game production credit. No, it's been around for a few years, but I think it's pretty neat. They really want to draw video game production companies to Pennsylvania, and there are some big ones here, some out in Pittsburgh, and then we have some companies in this area that take advantage of this. But again, it's a 25% credit developed that you can get on the production of a video game. So I don't know if that pertains to anyone, but it's a great credit. You can get a lot of money back if you were involved in the video game industry. So the R&D tax credit, this is a federal credit. It is basically the same thing as the state R&D credit, only it's at the federal level. So basically what that means is that the credit would be good for federal taxes, whereas the other credit would be good for state taxes. It feeds off of the IRS code, and it basically returns about 10% of your expenditures back in the form of a federal credit. The nice thing about this credit is it's not sellable, which I wish it was sellable, but it's not. But if you're a company that's within its first 5 years of producing revenue, and let's say you don't owe any federal tax, so it would be sitting in your account, they let you use it to pay your payroll taxes for your employees. So your FICA, that 6.2% that you have to pay on payroll, you can start to monetize your credit that way by using it to pay your payroll taxes. So it has value to young companies. And then over time, if you become profitable and you owe money, then you can use the credit, the remaining credit, to pay your federal tax. Okay. And the thing that's different about this, I should point out, the R&D state, KIZ state credits, they have a separate application period, which by the way is coming up. So if anybody thinks that they're eligible or want to know if you're eligible, you should probably talk to me now, because the applications are being accepted in December. The federal credit you file for when you file your federal tax returns. So that there's a form that's submitted, you claim the credit, and then later in the year you file for the state R&D credit. So it's a little different. So if you missed, you've already filed your federal taxes and you missed the federal credit, you still have time to get the state credit. This is important because our company's been around, I said, for 24 years. And the reason we're in business is because people assume that their accountants are applying for everything. They assume that everyone, they're taking advantage of all of the opportunities that are out there. And this is not to bash accountants. I have an accounting degree. But the fact of the matter is accountants have to know a little bit about a lot. And it's just there's too much going on in this space for anyone to know all of the incentives that are out there. And this is all we do. So you have to ask questions, you have to investigate to see if you're getting all of the benefits. And the reason we're in business is because all of our clients were not, basically. So you have to ask those questions, you have to be on top of it. If you're going to do it yourself, you have to check these websites and see what new incentives there are. If you're going to work with a company like ours, we'll do that for you. Don't assume you're not eligible. So much of my time is spent with companies that were told they weren't eligible for anything. And it sounds too good to be true, but it's not. So, ask the questions. It doesn't cost anything to talk to me. If you have a question about eligibility, reach out and I can give you some insight. And I already talked about this. Don't assume a credit's not valuable because you don't owe taxes. Again, a lot of these credits are sellable, so you can monetize them and get cash for your business. R&D is a big one that there's a misunderstanding about. A lot of companies, because they're not testing medical in the medical space or whatever, they assume that they can't qualify for R&D. We have people that make bicycles, we have bakeries, it's basically a product. It just has to be a product or a process. Software companies. There's a lot of businesses that are eligible for R&D. And finally, don't assume the programs aren't worth your time, because they are. And they can be. $100,000 for a small business that's only making $200,000 in revenue, that's a pretty good return. R&D is a little bit less usually because it's a 10% return as opposed to a 50% return on revenue. But still, if you're getting these credits every year and you're piling them up and you're stockpiling them when you're profitable, you can wipe out your tax liability. It's a wonderful thing. There is one other program that I wanted to bring up that I don't have a slide for, and it's called the Employee Retention Tax Credit. Also a program that is extremely misunderstood. So many businesses have been told they are not eligible when they are. We have done hundreds and hundreds of these companies that were told they weren't eligible. The ERTC came out as a result of COVID. It followed the PPP loans. So if you're familiar with those, a lot of businesses got those. And they assumed that they were not eligible for ERTC because they got the PPP loans. That's not true. When ERTC first came out, it is true that you could not get both PPP and ERTC, and then they changed the law. So you can. So that's one misunderstanding. Second of all, a lot of businesses have been told that they don't qualify because they don't meet the decline in gross receipts. That is one of the criteria, but that's the key. It's only one of the criteria. People there's a misunderstanding that if you don't meet that, you don't qualify, but there's actually 3 eligibility requirements and you only have to meet one of them to get ERTC. So even if you were profitable during COVID, you can still get ERTC potentially if you meet one of the other 2 criteria. The second criteria is, were you affected by a government shutdown? Was your business considered non-essential? Were you shut down for a period of time? If so, you could qualify for ERTC. The third criteria is, did you start a new line of business after February of 2020? If so, you could be eligible for ERTC. A lot of businesses, I know my clients, that couldn't continue their business the way they were doing business and needed to survive, they started to do new things. Some even went as far as, creating masks and hand sanitizer. Businesses did lots of things to stay in business, but it doesn't have to be that dramatic. It could just be that you started a new line of business that's within your, realm of business. So keep those in mind. If you had employees during 2020 and 2021, and you think you either, you had a decline in gross receipts, you were affected by a government shutdown, or you started a new line of business. And again, it's not, it doesn't have to be all three. It just has to be one of them. You may qualify for ERTC, and the rewards for that can be substantial. You can get $5,000 per employee for the period that you qualify in 2020. And you can get $7,000 per employee per quarter in 2021 for the period you qualify. So you can see where if you have even a small number of employees, if you had 10 employees and you qualified either one, it could end up being a lot of money. So keep that in mind. Recommended action items. So basically find out what you're already getting. Make sure some people, I talk to them and they say, oh, I think I'm taking that. They're not really sure. I understand you're running your business. This isn't your primary concern, but take a minute to just find out what you're getting or what you're not getting. Ask the questions. You can talk to your accountant if you want to. You can call someone like me, but ask the question and figure out if you might be eligible. And as I said, call me. It doesn't cost anything to ask any questions. And then here's my contact information. I'm happy to talk to anybody who wants to know more. I work for both of these organizations. MBM handles kind of every incentive other than R&D, and R&D, Bowers R&D handles R&D specifically. And that's it. Any questions?
Oh, go ahead. No, Tom, sorry.
I got mine written down. So.
Okay, one of my questions for the KIZ, in terms of revenue, do grants count as revenue for a company?
Yes, they can, as long as they're not a state grant. They won't let you double dip.
Okay.
So, but yes, absolutely, a grant. That's a great question. Yes, yes, they can actually count as revenue, correct.
Tiffany asked to clarify, pre-revenue companies would not be eligible for KIZ credit, correct?
That is correct. You have to show a base year. As I said, base year can be 0, but then you have to show some increase in revenue. So once you've put some revenue on the books, then that's when the KIZ could kick in.
For KIZ, if a business has multiple locations,
Mhm.
can they use the KIZ location to leverage all that, or does it get split up? Or how does that work?
No, it depends on, the company is judged based on where you file your tax return. So if your tax return is in a KIZ, then you're good.
Does Delaware Incorporation?
Doesn't matter.
Doesn't matter?
So pretty much every business I work with is incorporated in Delaware. So it has nothing to do, as long as you're filing a PA tax return, you're good. Any other questions?
So one of our PCI Ventures companies ran into this issue. I guess if you're not making revenue, if you haven't received any funding, there was a misconception about filing taxes, but you
Right.
should file your
Yes.
taxes every year, no matter what, because that's something that you need. There's paperwork involved that you need to show for the KIZ credit.
Exactly. And even if you file a 0 return, file the tax return, because that could be your base year. And you're just going to have to go back and do it if you haven't done it and you want to apply for KIZ. Absolutely.
Are there any other action items that you would suggest companies take advantage of now, even if they're not thinking about it, just because down the line, these are some things that they could missed opportunities.
Right. Oh, absolutely. Well, first of all, if you're not in a KIZ, you can't qualify. So you want to be in a KIZ. So, like I said, if you're in the Pennovation Center, you're already ahead of the game there. But if not, you need to find a location that's in a KIZ. The other thing is, if you're thinking about starting a company, do it before the end of a year, because the KIZ looks back 2 years. So for instance, let's say I was going to start a company and I wanted to wait till January 1st. Well, now I just added a whole year onto waiting for my KIZ eligibility. If I start my company in December, I can count that as my base year, even though it's only a month. So if you're on the fence and you're going to start it December 15th instead of January 1st, because you just took a whole year off your eligibility. That would be something to keep in mind. And other than that, that's pretty much all you can do to prepare for KIZ. And you don't have to wait till you're eligible to get accepted into the program. So if we know that right now you don't have any revenue, you can't apply this year because you are just, your company's 1 year old. Well, there's steps that you, as you said, that have to be taken. You have to get accepted into the program. You have to do back reporting. So you can get into the program now, and even if you're going to apply next year, it's not a bad thing. So that's pretty much it.
Is
Any-
there the best time to connect with you?
KIZ and R&D have application periods in December. So right now is the time to connect with me if you think you might be eligible. Because we cut off when we can take new companies before December 15th. That's just the last day that we can submit the application. So talk to me now. Otherwise, you can talk to me in the new year. But I mean, reach out. I can tell you pretty quickly if I think you're eligible or what you would need to do to be eligible. So have the conversation. I'm available. So that's it. Anything else?
It's kind of new introduction, but like, do other states do this? I'm just kind of wondering about the landscape of like, and why the state doing preference, because they want to like incentivize businesses to be here.
Absolutely. It's about economic development. And other states have, specifically, there's states that have R&D credits. There's no other state that has like a KIZ. But a lot of them aren't sellable. It's really crazy because Pennsylvania, I mean, I don't think of it as the most overall progressive state out there, but when it comes to innovative companies, they're literally the best state for these types of incentives because they make the credit sellable. You'll find other states that'll have an R&D credit, but it won't be sellable, or it'll be refundable. There'll be different things that make it just not quite as valuable. But yeah, the states want to incentivize you to move there or to stay there or to build your business and hire people there. So that's the reason for it. So we hope they don't get rid of these incentives because a lot of companies, took advantage of companies like Ticket Leap and RJ Metrics and lots of businesses that have really taken off in this area have all used these credits to build from a young, young standpoint when they first were formed. So.
I mentioned this, so the timeline of submitting, you're eligible, and then you work with your group to sell the credits. What's the time frame in terms of getting that money
Right
back to the company?
Yeah, that's a good question. So if you applied December 15th, let's say, for the KIZ, then what happens is we have to wait to find out if you got the award and how much you got. Then when you file your taxes for that given year, the next year, so in other words, 2022 tax you're filing in 2023. Once you filed your taxes, they want to see if you're going to use that credit to pay your tax. So you have to get past that period. Okay. Then you can say, okay, I didn't use it, or I only used a portion of it and I'm going to sell it. We can find a buyer in 2 days. We have buyers just because we've been doing this for so long. So that's not the part that takes long. What takes long is the processing at the state, unfortunately, and that can take about 3 months. So from the time that you pull the trigger on selling it to actually getting cash, could be about 3 months, and it could be longer if they're running behind, but we have zero control over that. You should have it within 6 months. That would really be bad, but it could take up to 6 months. Yeah.
No, I mean, we have a lot of companies that take advantage of federal grants, and that you have to do a lot for that time lapse of like,
Right.
okay, I know the money's coming, but it's not immediate.
Right. Well, ERTC is another, that was taking 9 months to get the money to companies. But luckily, recently, we've started to see the money come in around 4 and 4.5 months. So it's getting better, which I don't know why, but we're not asking. We're just happy. But yeah, you do have to allot for that. And when we bill a company for ERTC, they have a choice of paying upfront or paying when they get the money. There's a little bit of a difference in the fee, but the fact is that some businesses need to wait till they get their money to be able to pay the fee. So we kind of take that into account. So, and I should mention that our companies work on performance only. We don't charge hourly rates. So it's all based on what you get. We get a percentage. So if you don't get anything in a given year, there's no fee. So that seems to work well for companies that are worried about capital. Any other questions? Okay. All right. Well, that's all I have. So thank you so much for coming. I appreciate it very much.
Thank you.
Reach out if you have any questions. Thank you.